All right, welcome. This is Tuesday. We've got about an hour and a half or so before the session closes today. Want to just take a quick look at what's happening in the market and then also show you a few stocks from the gaming industry because I just happened to write about those for Market Beat, and it's kind of interesting. I like that industry because I just love Vegas. I miss going to Vegas. Last time I was there was November 2019. People, things open, restaurants, parties, all that stuff we used to do. We'll do it again soon, and the gaming industry is up for that reason. So let's start with the NASDAQ today. And you see that it dropped down. I like to show a 5-minute look here. So you see it had a big gap down at the open. It's kind of rallied its way back, a little stair-stepping here, kind of pulling back a little bit more. Has it really closed that gap there? It kind of closed the gap and then fell again. Here's how it looks back on a daily chart. So it's right about at its session high. It is at 1338. So yeah, just a little bit below where it was yesterday at this point. So what happens when you see the NASDAQ down like this? And the S&P 500 for this matter, because we're looking at essentially the same stocks that are kind of driving the performance of both of these right now. You do see the same thing here. It gapped down. It's back up at the top of its trading range, still getting hammered for the day. So what happens when you see that? You do take a look at the biggest stocks. Apple, you had a gap down in Apple. You can look at it on a 5-minute chart. Get a good sense of what happened. You could see Apple kind of fighting its way back. There's that stair-step pattern as it's trying to rally higher. Looks familiar. Microsoft, what's happening here? Same thing. There's some bad news out there today mixed with all the good news. You have all the reopening plays going on, of course, which is great. Then you have this pipeline breach by Russian hackers, apparently. That's not a good thing. You have the jobs numbers that was cheered last week because it meant that the Fed would maybe hold off on raising rates a little bit longer, but now there's more debate, of course, about whether unemployment payments are keeping people out of the workforce. I think it's one reason. I think there's other reasons as well. Schools not opening, some parents, particularly women, cannot get back in the workforce, perhaps, especially if they have jobs outside the home or they can't work from home. So you're seeing a lot of things going on here right now, kind of mixed forces battering the market. Guess what? That's usually the case. I know we live in crazy, crazy times right now with some events that in our own lifetimes are unprecedented. But nonetheless, the market has always been subject to events, macroeconomic, geopolitical, all kinds of things that really can wreak havoc on the market. That's nothing new. Even in these crazy times, craziness is nothing new when it comes to the market. So let's skip over, and I apologize if it's a little noisy. My neighbor's getting their roof done today. Of course, I'm trying to do a video. Here's the chart for Penn National Gaming, and I wrote about this for Market Beat. That should be published tomorrow. Now, what do you see here on Penn? You see that it reported earnings a few days ago, then it fell after that. It initially fell today. I'm going to go back to this 5-minute chart. You see another gap down, okay, with the broader market. 3/4 of stocks will tend to follow the market. This is a member of the S&P 500 now. In case you didn't know that, it was added in March. So it is one of the biggest American stocks. Obviously, the market cap is going to be lower now than it was back in March when it was added. But, you see a correction here. You will be seeing index funds and some of these other funds that track the S&P in some way. You'll see this stock continuing to get added to those. So over time, the prospects are good. Also, again, the reopening play. This company operates casinos, resorts. They teamed up with Barstool Sports. They have an app. They have a sportsbook app. They also have their own app, the Penn gaming app. So a lot of things going on here as online betting gets legalized in more states and as people are returning to their casinos throughout the U.S. and their restaurants and their resorts. Come on. the case only looks better and better. You can tell that here by the earnings outlook. So we had a loss of $5 per share in 2020. No surprise. And actually, the slide began before the pandemic. That's important to recognize here, that you see you had some poor quarters down here in 2019. And then, of course, just continued getting slaughtered in 2020 for most of the year. Although in the third and fourth quarter, things did start looking up again, but revenue was down. So this was kind of earnings management over here in the third and fourth quarter. You still had year-over-year revenue down. Changed, that turned around again. You had 14% revenue growth in the most recent quarter, first growth since late 2019. Okay, let's take a look at another gaming stock. This one might be more familiar to you, Caesars Entertainment. Who doesn't love Caesars Palace? Come on, you gotta love Caesars Palace. I do. It's a lot of fun. I'm just a Vegas fan, what can I tell you? So this company, you see the same thing here, huge loss in 2020, $13.51. Here too, you had a slowdown at the end of 2019. Now, I don't know what was going on in the travel and tourism industry or with the gaming industry in particular at the end of 2019. Clearly something was going on, that revenue was starting to slow here in the December quarter. Earnings were slowing. I mean, we saw something similar with Penn National. But again, here we see not the same type of correction in Caesars that we just saw in Penn National. This one's holding up much better. In fact, if I go over to a daily chart, it's right about where, just a little bit below its 10-day moving average right now. It's 0.6% below its 10-day average. So that's holding up okay. Let's go over to the 5-minute chart. Looks familiar. Gap down, fought its way back, down again, now finding its way back again. So we're seeing the same thing here. I have two more smaller gaming companies that I want to show you. This is Century Casinos. Now this is a small company, market cap of just $409.9 million. This also operates casinos, restaurants, hotels, any type of horse racing facility they have. So just again, very heavily in the tourism and leisure spending industry. And hey, what do you see here? Something that looks familiar, right? A slowdown in earnings at the end of 2019, although their revenue was still growing at this company. You know, sometimes a smaller company like this, it's easier to manage this stuff than a huge conglomerate like a Caesars, for example, or a Penn National for that matter. So we are seeing here earnings started to grow, although we had a loss in the most recent quarter and a little bit of more earnings growth in the past recent quarters, but a revenue slowdown. And that is expected to turn around again in 2020 and 2022. Now, this is because it's a small company, you have a higher beta. Well, not because, but you see that a lot in these smaller stocks. Little less liquidity, and they tend to trade sometimes in a little more volatile fashion. Let me see if I go over here to the 5-minute chart. You see, you can get a sense of some of this lack of liquidity and also sometimes a little bit of disagreement between the buyers and the sellers when it comes to the bid ask. You've got these wide 5-minute price swings and then sometimes these gaps. That's just really an indication of the lack of liquidity and sometimes the bid-ask spreads. I mean, you're not going to see that in something like a Caesars if we go back to that and take a look. See, much smoother, much smoother. I mean, you had some volatility here, some choppiness at the beginning part of the trading session, but you don't see those gaps and you don't see as many of those wide swings as you saw in something smaller like a Century. And we'll just take a look at that 5-minute chart one more time. So this is today's 5 minutes. This is Mondays. This is Friday. So you go back over the past several sessions and you can see that. So I find that very helpful to look at the 5-minute charts and then also just to see how the stock I'm looking at compares to the broader market. So let's take one more glance at the S&P 500 before we get out of here for the day. There's the 5-minute chart. Let's take a look at the daily chart. Yeah, we've still got a big gap lower. You know, that daily gap could close pretty quickly within the next few sessions, just depending, again, on the economics, you know, the upside of whether the COVID cases continue to fall in the U.S. in particular, which they are right now. I know worldwide, places like India, there's some very tragic problems right now. But we are seeing some bright spots in the U.S., and that's a lot of what is going to be driving the performance of these markets. All right. Thank you so much. Appreciate you for watching, and I'll catch you again soon.